Hello, good afternoon, everyone. Just doing a quick sound check. Can someone let me know if they can hear me? Doesn't seem like anyone can hear me. If you can type in the chat box on the bottom right-hand side, if you can hear me, that'd be great. Oh, thanks, Michael. Appreciate that. I'm obviously not talking to myself. I might give it another 20 or 30 seconds or so just to let everyone know, or let everyone and give them the chance to jump online. Thanks, Matthew. All right, I'm sure we'll get a few more people coming online as we've just started the session, but welcome, good afternoon, everyone. Thanks for taking the time to join us today. Today's session is going to be a review of the ASX earnings season. We're about 80% of the way through earnings so far. So just wanted to discuss, where that XJO is at the moment and how earnings might reflect the market moving forward. I'm Blake. I'm a platform advisor here at Volatility, and I'm joined by Jimmy Vith, who is an options advisor at Point Capital. Good afternoon, Jimmy.
G'day. Hi, everyone. How are you?
Okay, let's get into it. So first of all, a little bit of housekeeping. As you can see on my screen here, this is just general advice. Anything from Volatility is general advice in nature. Does not consider your own personal circumstances or objectives or financial situation. You should consider whether it's appropriate for you. Past returns are no indication of future returns, and trading options is not suitable for everyone. Obviously, options can be risky, so if you're looking at trading options, I would recommend learning what options are, how to understand them. A lot of you guys on the system today are clients and are actively trading, so obviously you know and understand how powerful options are, but if you're new to options, just make sure you understand options completely before you start trading. All right, great, good to get that out of the way. So, look, today's mostly going to be about the ASX, what's been happening with earnings, and looking at the market and giving a bit of an idea around what we can expect over the next few months. First of all, I just wanted to provide a little bit of an update of the volatility system and what we've been up to. Most of the members online, you would have seen the updates onto the platform, but I'll just quickly showcase what we have been doing on the system. Leading into the new year, we're doing a big focus on, a lot of education and a community aspect to options trading to enhance your ideas. If you've been coming along to the webcasts, you would have seen Ivan in the last couple of weeks, Ivan Truelove, our managing director, do an options basic crash course for calls and put strategies, cash secured puts and covered calls. And last week he talked about our trading systems. So that's Ivan's trading plan, how he goes through and places a trade and how he manages trades as well. Both really good sessions. If you want to view the recordings, they're up on our website. If you log into the system, they should be sitting there. So definitely, tune in and watch that. Like a few of the platform updates as well, you would have seen the new strategy builder. I think this is one of Ivan's new childs that he's brought into the world. He's put a lot of work into building this system out, which should give you some more risk management tools and indicators to help with your trading. I guess, this system is supposed to, make it easier for you to identify trades. I won't go into this too much, and by all means, jump on the website to have a look about how this is built. But a couple of the things that, are helping clients is access to the TradingView charting just by clicking a button. I'm not sure if you can see my mouse, but the chart button under the XJO. And a lot of the risk management systems under the payoff diagram to really see, how your trade enters the market and what your risk and reward looks like. So definitely have a look at that. If you've got any feedback around the updates, let us know as well, and we'll see what we can implement. Probably just the other thing, and quite important for accessing trading, is our improved watch lists and filters. So we've done a lot of work on the watch lists to add some columns in. Probably the big one is the liquidity column. You can see on the far right hand side here, which shows you the liquidity of the options of the underlying asset. And Jimmy, like you would know, trading options, it's super important to find options that are liquid that you can trade into and get a good price, as well as trade out of and get the prices that you're looking for.
Most importantly, yes, definitely agree with that as well. If there's no liquidity, you're not getting in at all. So personally, there you go.
Yeah, so you can filter by liquidity on the platform now. It's indicated as low liquidity, medium liquidity, and high liquidity, and for both weekly and monthly options. So big game changer in finding the underlying assets that you're looking to trade. Make sure that you're trading stocks and options that have liquidity. The other big one is the dividend. So keep an eye out for the dividend here. It shows, how far away the dividend is and how much the dividend is being paid for each stock. And keep that in mind when you are trading. You might have some assignment risk with upcoming dividends, or it can obviously affect the underlying stock price as well. So we're constantly adding, features to the watch list. So keep an eye out for that. If there's any indicators that you'd like to see as well, we can add those in quite easily. And then filters are the big one that we've been working on as well. So, if you can't sit in front of the computer all day and, you want to spend your time doing the things you love, we've built filters in to help with your trading plan, essentially. So if you've got any technical indicators that you use to find underlying assets to trade, you can filter them through the filtering system. I've just put a few basic ones in here, as you can probably see, like the implied volatility rank is high, the 200-day moving average is below the 50-day moving average, and an ADX measurement as well. And that will just spit out the stocks that complete those set of requirements. So, like if you've only got an hour or two to trade a day or a week, having a filter on your system to show the stocks that, meet your trading systems is really a great way to free up some time and get the trades on quickly, and then, go about your business as usual. Probably just quickly, the other thing as well is where on the system, on the bottom left-hand side, you will see an upcoming features box. If you click on that, you can see everything that we're working on improving the platform too. So take a look there. You can see, what's in progress and how far along we're getting with updating the system. If you've got any ideas, by all means, add them in here too. We've had a couple of great ideas from clients that we're implementing. I just had a call this morning and someone's looking for, 4-hour candles on the charting. So, we'll go through the process and update that into the system too. So anything that you're looking for that we can add to improve your trading experience, put those in and we'd be more than happy to accommodate. All right, that's enough about the system and what we've been up to. I know everyone's here to talk about the markets and what's been happening in the markets. It's been a bit of a choppy start to the new year, although the XJO has been up quite heavily. Last time Jimmy and I were on a call, it was kind of mid-November, late November, and we both had the idea we'd see some bullish momentum into the markets leading into the new year. I'm not sure if that was luck or skill, but we we saw that, and markets hit all-time highs towards the start of the year, and have been a little bit volatile during the earnings season, as we probably were expecting.
Yeah, that's correct, Blake. Yeah, 100%. Yeah, obviously the market's continuing its bullish momentum at the moment, and we'll see. It's sort of like obviously stalled up around this sort of 70 to 700 mark as well at this stage, but we'll just have to wait and see where it goes as well from here.
Yeah, exactly. And I've just pulled up a chart of the implied volatility of the XJO. And you can kind of see towards the end of last year, November, December, IV dropped off considerably, and leading into the new year, we've seen an uptick in volatility, which is good for us options traders. Obviously, we're looking for movement in the market to capture. So naturally, you'd expect implied volatility to increase a little bit as we come into the earnings season, as there's lots of uncertainty and people are anticipating results. But what have you made of the increase in volatility, Jimmy, and kind of how is that affecting your trading?
What I found, obviously, with XJ at the moment is obviously, does anyone know what the market is expecting at the moment coming out of obviously the economy at this stage? Anyone know what's going on? Questions? Okay, so right now, what we're sort of expecting, sort of like obviously short term as always, the market is expecting rate cuts to start coming into the market. So obviously that's why the market has obviously gone vertically up as well at this stage. And obviously that's where we're at as well at this stage. So XJ is obviously hovering around, all-time highs. As you can see, S&P broke out last night again. Okay, another all-time high. The Dow's up there as well. Okay, and I think the Nasdaq is still getting close up to all-time highs as well at this stage, right? But that's where we're at as well at this stage as well. With volatility, it's sort of just tracking around the 12 mark as well, which obviously is on the low end. Are we expecting volatility to come in? At this stage, personally, I'm not as well. I'm expecting volatility to come in more closer to the end of the year. That's where I'm at as well at this stage.
Yeah, great. We obviously saw a spike in the implied volatility leading up to earnings season. That's probably just on the start of February, and it's come off a little bit, as you can see on the charting. And yeah, Michael, good question around options for the S&P 500. Yes, they are tradable. Not on our system at the moment, but we're looking at integrating US options some stage later in this year, which should be great. But yeah, no, you're right. Like the S&P broke out after this earnings season. A lot of the big technology stocks are in focus, and they keep recording record profits, which kind of justifies the rise in the index. Okay, I'll just pull up a chart on the ASX 200 as well, Jimmy. Like as we spoke about, towards the end of last year, it was falling a little bit, and it's had a good run into 2024. What have you made of that?
Well, obviously last year we identified, I think it was back in November as well, we said there could be a possible inverse head and shoulders. So obviously, starting from around, I think it was around August sort of thing as well. So if you sort of, draw it up as well, so you had the inverse, the last bit of the head was in November, and then you sort of had the shoulder come in. Once it broke the 71.50 mark, it actually took off as well. So personally, I was expecting it up around the 75.50 mark as well. So as you can see, probably the last where the shoulder sort of started from. But it's actually got an extra as well, 7,700. So obviously, as I said earlier on, the market is expecting rate cuts as well. So, the US, look, at the moment, guys, we're in this sort of Goldilocks period as well, okay? What I mean by that as well is pretty much the RBA and the Fed have got everyone's back at this stage, right? So what that means is obviously the market is waiting for rate cuts. That's it. as well. And it's reflecting, obviously, I think I've spoken about the bond market as well. The bond market is reflecting, rate cuts as well. I'm expecting the US to cut 3 times this year. But the Australian market, I'm only expecting 1 rate cut as well at this stage as well. But obviously, let's see how they sort of obviously change their tune. The US changed their tune back in November. Okay. The RBA still hasn't changed its tune as well. But as we're seeing right now, obviously, I will talk about obviously reporting, but what we're seeing is the banks are in perfect position at this stage. And does anyone know how much the banks account for the XJO, guys? So I can't see your answers as well, so I don't know what sort of a thing as well. So,
Nothing's coming through, Jimmy. I think, give them a couple of minutes, but obviously it is a big percentage with our big 4 players sitting here.
Yeah, it's around 42% as well. Accounts for the XJ index as well. So what pretty much, obviously, as we saw with the bank reporting, look, CBA was the one that actually released its numbers, but obviously the other ones gave us a trading update. But what we're finding as well, the market was expecting them to come out with bad debts as well. And obviously no bad debts have come out as well. No big sort of surprises, okay? And the market has actually liked what they saw. And the other thing as well, all the CEOs said the same thing. They're expecting rate cuts as well. So if they're expecting rate cuts next year, or this year, sorry, we're going to get a rate cut. That's it as well. So that's sort of a given as well. And that's why the market has taken off as well. So if you look at the banks, Westpac was trading around $21. It's at 26 now. ANZ's gone from, 23 to 28. NAB's over 30. CBA hit, 120, close to, you know what I mean? So it's pulled back a bit, but Macquarie's gone up there as well. So all the banks are looking okay as well at this stage. So that's where it's at. So we'll see what happens as well going into the future as well. And if they're sort of holding up the mark, which is close to, 50% of the index, all you need is a couple of other stocks to sort of, outperform, your miners and that, and the market stays up as well at this stage. So that's where it's at.
Yeah, I agree, Jimmy. And I definitely think the market is relying on the RBA and the news coming out. Like you see the week leading up to the RBA announcement, volume drops off. Like there isn't a lot of volatility in the market. People are just waiting for an update.
Yep.
And like you're right, like banks are in a great position. I think what's holding down the market, and we were speaking about this off stage a little bit earlier, is the iron ore price, which is affecting another big part of our market, which is the mining industry. Profits from BHP and Rio and FMG are struggling a little bit with iron ore falling off. So it's important to have a look at all of those indicators as you evaluate putting a trade on.
Yeah, correct as well. So look, obviously the index, we're sort of in this sort of sideways pattern right now. As you can see, it's sort of like sticking between the 75, 77 mark right now. And it's sort of reflecting in the volatility in the market as well at this stage. I think that the trend will sort of continue sort of on the upward sort of swing, anticipating. But as you guys know, there's always something in the background, that might eventuate. But at the moment, I don't know. I think the market's just in this sort of, place where it thinks the RBA and the Fed have got its back. That's about it. You know what I mean? So, and as obviously Blake sort of alluded to as well, the commodities have, iron ore has pulled back as well, but obviously they had a good run from back in November. Okay. So, they sort of held up the market, and then obviously the banks, came in and obviously, took over as well. So that's why the market sort of gone up to the 7,700 mark as well at this stage.
Yeah, absolutely. And Michael, your question, which is the best stock that represents the ASX 200? Jimmy, do you want to dive into that?
I think it's all banks as well. I think the banks just reflect, obviously, what's happened as well. So if you bring up a chart, Blake, of, let's call CBA, you know what I mean? So
yeah, bear with me one moment. I'll just switch the view over to the charting system. I'm a millennial, so I should know how to use this technology. It's the first time that I'm hosting on this, but we will get there. Bear with me. But as we just jump into this, we'd love to make this session interactive. Jimmy's going to be talking about a lot of the top 10, top 20 stocks and where they're sitting on the charting. But if you have any questions about any stocks you'd like Jimmy to have a look at, please let him know. Just type it in on the chat box on the right-hand side. Otherwise, we'll just keep going through and get through them one by one.
Yeah, but even if you bring up the whole index as well, so it's the XFL has actually been flying as well, from last November as well. So they're all going up as well. So look at as I said as earlier on, Westpac was close to $21. It's at 26. You know what I mean? So that's close to around a 20% increase as well. It's around 15%, but they're all sort of up there as well at this stage. So that's where it's at.
Yep. I'll bring up the CBA chart.
Yep.
Can you see that, Jimmy?
Yeah, I can see that as well. So if you can see sort of back in, the low was around about November.
Yep. 96.
Yep. Got to $120. So if you look, obviously if you put an overlay of the XJO, if you bring up another bank, Westpac, if you want. Same story. Yeah. NAB, same boat, you know what I mean? So they're all the banks have pushed up, as I said, it's most of the index as well. And they've pushed up as well from November. So they're sort of in this Goldilocks period as well. The game changed, the Fed started the talk of maybe, rate cuts have finished. Rate increases are finished. And I started talking about rate cuts as well. And then obviously the market sort of cottoned on, and obviously if you look at the S&P took off around the sort of same period as well. So what ended up happening was the market just took off as well. So last year we were sitting at 71.30, I think it we were talking 7,500. So that's where it's at.
Yeah, absolutely.
Yeah, so that's all it is right now as well. And the thing is, obviously the market is wanting rate cuts, and the market will get rate cuts. Simple. You understand? That's where it's at as well. Unless, look, some black swan event happens, which at the moment I can't see as well at this stage, obviously because that's why it's called the black swan. But I think, look, personally as well, if I'm going to look in the future as well, the biggest thing this year is, does anyone know what the biggest thing is this year? Apart from rate cuts?
We'll give them a couple of seconds to respond.
Yeah, I'm just waiting as well. Yep. Let's see if anyone's sort of picked up on it. No. Yeah. Okay. Yeah. All right. So the big thing this year for me is obviously the presidential elections out of the US. So that's out in November. Okay with that. I know, it's 7-8 months away as well. But the thing is, what you got to sort of understand is the market wants one particular person in. Does anyone know who they want? Okay.
They don't want Trump, do they, Jimmy?
They do want Trump, actually. They do want Trump, Blake. Yeah, correct as well. Why they want Trump is, from a market sort of standpoint, okay with that, is he's going to cut the corporate tax rate. Okay with that. So obviously he's sort of come up with that as well already. Okay. Last time he was in, you remember how it was about the market? Rah, 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 30,000, blah, blah, blah. Twitter every day, the same sort of story as well. The market wants him as well. He was calling for negative rates. He was calling for a weaker US dollar. As you can see, he's good for corporate, okay, America. And that's why, I think Blake sort of said as well, the reporting has been okay. Out of the US as well, so he will make corporate America stronger as well. Go with that. So that's why the market wants him as well. That's your big event as well. Going into the end of the year, I think we'll probably just, for me at the moment, the market looks at the moment pretty comfortable where it's at. Okay with that, but that might be your big volatility moment as well in the market as well at the end of the year. That's what I think as well. I could be wrong, but that's what I think as well might happen as well at the end of the year.
Yep. So Jimmy, we've got a couple of big events happening, definitely happening towards the end of the year. We're expecting, a rate cut on the Aussie market and a presidential election. How does that affect your trading at the moment? Do you keep that in the back
At
of
the
your mind?
moment, okay. So what ended up happening was you've got to, like as I said as well, we're in this sort of sweet spot right now as well. I think the market sort of will have this sort of still upward momentum as well at this stage. Until probably the end of the year as well. So, if they're talking rate cuts, depends on, look, you're going to have this sort of, volatility come in around that sort of period as well. The talk is they're looking at the Fed cutting in May, June, okay, with that. So you might have that volatility in that sort of May sort of period as well. Our market is expecting rate cuts from the RBA to come in around the August to October sort of period as well. Okay with that. So that's the key things as well. The only thing obviously to keep an eye on as well in the market right now as well, the biggest thing that you need to follow, apart from obviously the RBA, is our inflation number. Okay with that. So if you get any spikes in inflation, okay with that, might cause some volatility. So you might want to see, obviously track, volatility website as well. But obviously you'll find that sort of does spike a little bit, okay, on the XJO. They're your sort of key events right now, okay. If you keep an eye on, your, inflation number as well. If inflation, inflation is definitely not going away, but it depends how they spin it. Okay with that. So you've got to understand the market is expecting rate cuts to happen. And as you can see, our inflation got up to around 7%. Okay. Now it's down around 4%. Okay with that. So if that's sort of, the trajectory is sort of down, okay, you're going to see this market sort of continuing its sort of upward sort of momentum. Mm-hmm. Okay with that. Now we do have an inflation number coming out next Wednesday. So you might sort of get some volatility as well. The market is expecting a bit lower, but that sort of, concludes our reporting. Okay with that, and away we go. Yep.
Yeah. Do you, Jimmy, when you're looking at this news coming out from the Fed and the RBA,
yep,
do you have a view on what you think it might be and put a trade on, or are you waiting for the actual number to come out before adjusting your portfolio?
Depends on. Look, obviously I'm a trader as well. I'm expecting the inflation number for next week to be slightly higher. Okay with that. Slightly as well. So that might sort of push the market slightly down. So I'm personally anticipating that it might be slightly higher due to oil prices. All I do is I just track oil prices personally. So oil prices have gone from 70 to 80. Okay. So and as you can see, petrol prices here have gone up as well. I don't know what everyone else is paying, but, ours is close to $2 here as well. So that sort of pushes inflation slightly up. So, I do anticipate, and going into that sort of May sort of period, May-June period, I will be sort of playing that they will cut as well. But the market sort of knows that as well. Do you know what I mean? So the big game might be to play that they don't cut, you understand? And the market sort of pulls back as well at this stage.
Yep. Very good.
Does that make sense, guys? Yeah.
Do you want to have a look at some charts, Jimmy? I'll bring up maybe a couple of the iron ore stocks.
How long expiry dates do you like? Look, for me, it comes down to I think the longer you have, the better. You know what I mean? As you know, with options, they lose their value in the last sort of, obviously, it loses 2/3 of its value in the last sort of couple of weeks as well. So you probably want to play a little bit sort of longer term. Okay with that. Look, if you want to sort of obviously go for a full hedge, okay with that, obviously it's cheaper to buy short term. We get that as well. But obviously, as you know, if you don't get the movement, you pretty much obviously lost that value as well pretty quickly. Okay with that. So you always want to sort of play longer term. I think, last year in November, we were talking about the banks as well. And I said to you want to play the Feb sort of March period. Okay. If you had done that as well, you would have done okay as well. So short term for me is sort of hard as well. If you want to play longer term, if you're going to be setting up anything right now, you probably want to look around the May sort of June sort of period as well at this stage. It depends on what your view is as well. But for me, the market is sort of just tracking sideways as well.
Yeah, cool. All right, I've brought the BHP chart up, Jimmy.
Yep.
Obviously, a bit of pressure on iron ore at the moment, and earnings weren't overly fantastic for BHP a couple of days ago. What are your views around, or what are you looking at the charting on BHP at the moment?
With BHP, you've got that sort of support level around that sort of 42 mark, is it? Around that sort of mark as well? Yeah, around there sort of thing as well. So that's what we're looking at as well. If you obviously, I know you can't bring it up, but the iron ore chart, it looks obviously it's created a lower trough and a lower peak as well. So what that means in theory is obviously iron ore is sort of coming off as well. The big sort of unknown right now is coming out of China. Okay, with that, China's economy is struggling right now, guys, as well. So let's not, obviously sugarcoat it. So pretty much, obviously, you're seeing what's happening over there in the sort of property sort of sector. Okay, and technically it looks lower as well. So, and usually you find with BHP, once they pay their div, they usually just pull back as well. So that's why the market is obviously held them up to good levels, but the iron ore chart has flipped over for me, looking bearish at this stage. Yeah.
Okay. And does the iron ore price really affect the way that you're trading BHP?
Yeah, it does. Yeah, if you're going to be trading BHP, Rio, and Fortescue, okay, you need to keep an eye on the iron ore chart, right? Because that's where they get, pretty much 70-80% of their earnings. Look, BHP's got copper and a few others as well, okay, but their main earnings right now has been iron ore, and that's what you're sort of reflecting as well, what's happening as well. Fortescue's the same. Obviously, they're trying to move over to hydrogen and a few others. Rare in a similar boat, but you're sort of finding that all those sort of stocks as well, 80% of their earnings come from iron ore as well at this stage. So yeah, so that's where it's at. BHP offloaded their oil business last year to WDS as well. So, that's, they're not earning anything from there as well. But yeah, look, I just think as well, and BHP's going to get rid of their coal division as well, I think I saw as well. So that's sort of obviously, they're sort of, streamlining their business to one thing, which is really surprising, which I thought they'll probably go the other way. But, that's what the market sort of, and that's why I think right now, just keep an eye on the iron ore chart as well. But they're all looking technically slightly bearish, personally, as well.
Yeah, I've just brought up the FMG chart, which has probably been the best supported iron ore company on the market.
Correct, yep.
Holding up okay.
It's holding up okay as well, but as you can see, there is a pattern forming right now as well. Okay, with look, so Fortescue, straight down the line, earnings were up around 40%. Okay with that, so good report. They increased the div. Okay with that, but it comes down to obviously the market knew that was going to happen. We saw iron ore chart, iron ore go up as well in that sort of period. But right now, what you're sort of starting to get is a head and shoulders pattern. Okay, and you'll find that after it goes ex-div, there's no real reason to be holding it personally because it pays a div in the next 6 months. So if iron ore keeps falling, what you probably want to do here, guys, if you're holding FMG, is take some protection on your portfolio. Hedge it, do something as well, and away we go. Because obviously, if you don't hedge here as well and iron ore keeps falling, this has got potential to go under 25s and 24s pretty quickly as well at this stage. Yeah. So that's where it's at as well. So yeah, so earnings were good. Flatline earnings were good as well. Obviously, they're trying to move their business. They're trying to move, to hydrogen and a few other sort of stuff as well. That's fine. Okay with that. But as you know, Fortescue's in a spin at the moment to sort of get that up and running. Okay with that. So they're sort of in that sort of production phase. I would just keep an eye on iron ore as well at this stage. But I think, as Blake sort of said before, that they've done pretty well. Okay, the chart looks pretty well, but as you can see, if the iron ore chart's coming off heavily, you probably want to just hedge up as well, personally.
Mm-hmm. Good. What else do you want to look at, Jimmy?
Okay, so pretty much obviously the space that's moved this time around has been your property sort of sector, guys. So what you found is, depends on what sort of properties also your Goodman groups and a few other sort of groups have come up pretty well. Okay, so they've done pretty well. They've sort of spiked up. So obviously their numbers are sort of looking okay. Then the flip side was something like a Lendlease. You understand? That's more in that sort of commercial sort of space as well. That got their report was pretty average actually as well. So it's sort of comes down to what it looks like as well. So the property sector was the play this time round. The other sector that I found was a good sector to play was your consumer discretionary. So with the stocks that I mean there, you pretty much had your Woolworths, which I thought the report was on the average side. Okay, so as you can see, that's sort of reflecting as well. So it's hit that, $33. Look, obviously the CEO resigning wasn't a good sign as well, but obviously the numbers down the line weren't fantastic. Reason being is obviously everyone's sort of holding back now, so people are just buying what they need. But the one that surprised me a lot was Wesfarmers. Because what's actually happened as well there as well, obviously Bunnings and Officeworks are still doing their 5% and 7% respectively. But the market that sort of took me by surprise was your Kmart and your Target, which obviously is going to become Kmart. Okay with that. A lot of people are trying to find ways to save money. Okay with that. And you're seeing the numbers reflected in Kmart as well. So Kmart had a fantastic year as well. So that's where it's at. So that's why Wesfarmers has taken off. And pretty much, if a lot of people know this as well, but obviously with Wesfarmers as well, if you look at the bond market's been coming off. So usually that sort of reflects that rate cuts are going to happen. And off it went as well. So it's close to $65 now as well, which is obviously took me by surprise on a report. I didn't personally play it, but I think that was a sector as well to play this time around. And as you guys know, in reporting, guys, you're going to need at least, depending on your volatility, and this is why the website is very, very important, guys. I saw Blake, putting in, volatility and which ones are sort of stacking up as well. You've got to make sure that you need volatility, depending on how you play it as well. But if you're going to play double-sided, you're going to need at least a 3 to 4% move on a report, okay with that, to make some money. So that's what actually happens as well in reporting as well. Yep. But this one took off as well. Woolies was down 7% on the day. The other one, obviously, you had Lendlease down around 15%, okay, on the day. So they're the reports that you're going to think as well. What you find, guys, the bigger stocks like your BHP, Rios, Fortescues and all that don't move up as well. Don't move as much as well. So you'll find that obviously sometimes they're not the ones to play with as well. So that's why it's important to use this website, guys, as well. And I'll keep sort of stressing about it. Keep a track on volatility. Okay, that.
Yeah, so I'm just on the watch list now, and most people online are members with us and will have access to this. But anyone watching the recording, jump on, and on the watch lists, we've got an implied volatility column here. So you can see the optionable stocks that have the highest implied volatility, which is the expected move over the next period of time. And you can compare it against the historical volatility of the stock as well. But like Jimmy, as you know, like trading options, volatility is one of the most important factors that you need to keep an eye on.
The number one thing, correct as well. I agree with that as well. Do you know what I mean? So that's what, if you're a trader and an option trader, just learn volatility, guys, as well. So that's why I said, this website is fantastic as well, because you see, where it's tracking, what it's doing, and away we go, right? So that's where it's at.
Yeah, and if you jump onto a stock, and on the overview page here, we've got a charting of implied volatility as well, so you can get a good indication of where it's sitting at versus where it has historically been over the last 12 months or so.
You just want to bring up Woolworths as well, Blake, for me on a volatility.
Sure. Yeah.
Okay, so as you can see, guys, see the volatility sort of tracking sort of that sideways movement, going into its report, and then all of a sudden it took off, right? Okay, and that's what you sort of want to look at as well. You know what I mean? When you're sort of trading, options as well. So you sort of like, that sort of flatlining as well, and then obviously volatility spiking. As you guys know, if you're in a trade as well and volatility spikes in your favor, you do pretty well out of it as well. So that's where it's at.
Yeah, absolutely. How much of volatility is a factor in your trading, Jimmy, whether you're
high,
short premium or
probably
premium?
not 95%, Blake. Yeah, you need volatility as well, guys, as well. So obviously, for me, look, I like playing, as I said as earlier on, I like playing a bit more longer dated. Okay with that. But the trick sometimes is, anything that's got a high vol proposition, you might want to come in and sell if you can get the numbers to work. Okay, short-term vols. Okay, that's a trick sometimes, but as I said as well, volatility is the number one game in options. If you're going to play reporting, that's where it's at as well.
Yeah, no, absolutely. I have a lot of, newbies coming to the option space and learning all about options. And, the one thing that we can recommend them is, to look at the volatility of the stock. But like it is a good indication, but probably the the opposing side or the contrary to the benefits of volatility can indicate some stocks that aren't doing so well.
Correct.
So just because it has a high implied volatility doesn't mean you should be selling premium. You can see at the top of the watch list here, Chalice Mining has the highest implied volatility on the market, but it's down 83% in the last year as well.
Yeah, correct as well. So obviously you got to look, you look at your volatility, but the next thing you also have to look at is the chart as well, right? So, if you look at Chalice's chart, it's been trending down for the last, year or 2 years, right? So, there's no sort of sugarcoating it as well. So, where's the bottom on this one? Who knows as well? But obviously it's got high vols, okay? And does that tell you that's a buying opportunity? No. You know what I mean? That's where it's at as well. So, to me, the trend still looks down. It hasn't even looked like it's turning over. So why would I bother? You know what I mean? If I was going to say anything, I'd stay on the short side as well. You know what I mean? Any sort of tick up on it, I'd be staying short on as well. Until it sort of gives you an indication that it's turned over, there's no point trying to sort of chase it at this stage. Yep. Anyway, that's where we're at as well. So obviously, look, next week we've got a couple of sort of reports that you might sort of want to look at as well, guys, as well. I don't know so how you sort of trade as well. The one that you probably want to look at for me next week, you might sort of want to have a look at. Woodside might be an interesting one. The other one that I think you might get some movement as well. If it's any indication as well, you might get Coles as well, sort of in that sort of space as well. That's sort of consumer sort of discretionary. You'd have to sort of look at your things. But if you bring up Coles sort of chart as well, Blake. You might sort of get a movement either way. You know what I mean? So that's where it's at. Look, if it's reflecting what are they going to do better than Woolies? Who knows as well. But obviously you want to sort of play double-sided on this one as well if you want. That's sort of one to keep an eye on. Woodside for me, look, obviously I've got a bit of a fascination with the oil stocks personally, but it's another one as well. You know what I mean? You want to play. Look, when you're playing reporting, guys, the number one thing you have to have trend as well. So you also got to have a hedge in place as well, just in case, right? So you always got to cover your other side as well. So obviously your view could be wrong, okay, and away we go. But look, obviously that might be one to play. You've got obviously the other one that you might look. I reckon it might be on a high vols. I haven't really looked yet as well, but you've got Worley as well. That usually is a big mover as well in reporting. But that's about. I think they're the only three that I'd be sort of eyeing out maybe for next week as well.
Mm-hmm. Yeah.
What's the vols running on it, Blake, at the moment? Sorry, put you under the spot.
That's all right. IV rank at 92. Yep. It's sitting at about 30 and a half.
Okay, yeah. So it's on the high end as well. You know what I mean? I know it can sort of track higher as well, but that's where it's at as well. So, that sort of space has been, that you sort of, depending on how they're doing as well. A company's cutting back as well on spends and all that as well. So that sort of might reflect in the Worley sort of thing. But I think that the other two, if I was going to play anything, I think Coles might be the one for a movement either way. So that's where it's at as well at this stage. So something to have a look at as well, guys. So go from there.
Yeah, and its implied volatility just spiked, as you can see. It's
correct.
About 24 and IVR of 100.
Correct. And that's the thing is also obviously the trick is, as I said as well, it's coming into it's reflecting what happened to Woolworths, guys, and that's why the volatility has jumped up as well. So what's the market expecting as well? Are the numbers going to be weaker or they're going to be stronger? And that's the thing as well. So if you're going to do it, guys, you've got to play both sides as well. So I don't know how people sort of trade it as well. You know what I mean? And this is why you use this the website, guys, as well. So you know, and I think Blake sort of started from the start, guys. You know, if you're going to look at trades, look at, you know, how to set it up and what's your best payoff as well at this stage. So that's where it's at.
Yeah. Michael's just asked the question.
How long expiry? Look, depends on how you want to do it as well, but you'll find the volatility is really high on the short end. Okay, with that. So, you know, you might want to play your March, end of March, even end of April. You know what I mean? So it's up to yourself. But as I said as earlier on, you got to look at the website, guys. This is why the website is fantastic as well, because you can see your payoff. You know, what makes you money. Yeah, if it's not going to make you money, is there any point doing it? You understand? And that's what it's saying. That's why, you know, yeah, I know Tom and Blake and Ivan have been working so hard in the background, guys, to get that up and running. And this is what you need as well, to see what pays you off.
Yeah. Jimmy, how about we, like, just on Coles, how about we look at a strategy that we've put together that, like, trading both sides that might benefit from that, what you'd be looking at?
Yeah, all good. Yeah, no problem as well. Yep, cool as well. So, obviously, you bring up the chart on Coles. Okay, so you've got, obviously, this sort of the support level there as well. So, potentially could go lower as well. So, let me just make this a bit bigger so I can see it as well.
Yep.
Okay. Okay. All right. So you've got a support around the 15 mark. Is that right? Lower end. Yep. And potentially could go up to around 16.50. Go with that. So what you've got to do, guys, here, you've got to look at let's start off with a bull call and a bear put.
Okay. We'll go the bull call.
Yep.
Here we go.
Yep. Okay with that. So the bull call, obviously, adjust your strikes from maybe 15.50 to 16.50. Yep. Okay with that. And obviously, so if it breaks through 15.80, we know resistance around 16.50. So you do okay there, guys, correct? If it jumps, and then also, so you got a 62% max reward, okay. And the other thing is also, so obviously you got to sort of look at your costs right now as well. So that's going to cost you around 38 debit, correct?
Yep.
For $1 spread. Yep. And then we've got to look at the other side as well. So the bear put side.
Or just for anyone looking, I'm just on the strategy builder here. Bearish position, clicking bearish. And I'll go to the bear put spread, and that should all populate.
Yep. So you want to bring your strikes down, so maybe 15.50, and I don't know, 14.50. So what that comes up as. Yep. Yep. Okay with that. Yep. So if you get your movement down to around $15, you start sort of obviously doing okay. Yeah. So, in total, let's call it 38 and 30. Okay, that gets you in for around 68. Potentially you could make double-sided as well. Some people try and pick the side at this stage, but as you can see with your max reward, you can get 70% there as well. Sorry, it depends on how you do it as well, guys. So that's where it's at as well. So you want to sort of play it as well. That's the way I'd sort of be setting it up as well. So doing both sides just to cover myself as well on both sides. But you're going to need movement, guys. But if anything happens like what happened with Woolworths, you get a 7% move, you get paid as well at this stage.
Yep.
Now,
absolutely.
You can get a bit cute if you want, you know what I mean? You can go do, sell shorter term, you know what I mean? Instead of the April, you can go sell, March. You know what I mean? Whatever you want to do, right? But because you're trying to use volatility in your favor. But it's, to me, sometimes the simple things are just easier as well. Just keep it simple sometimes, guys. So just use the KISS sort of strategy and away we go from there.
Yeah, great. It's a good insight. And how much does the Woolworths movement from the other week affect your play on Coles, considering, they're similar companies?
Well, there's similar companies, right? So if Woolworths was struggling as well, look, I get it as well, the CEO resigning as well, but their bottom line numbers weren't that impressive as well. So I think a lot of people, and you're sort of starting to see it as well with our consumers as well, everyone's sort of cutting back as well. Cost of living on food and everything as well has spiked up as well. So you're seeing it in people's spend as well. So I think people are tightening their belts pretty strongly as well. So that's where it's at. But you've got to play both sides just in case they have a good year like Kmart did. You know what I mean? So that's where it's at. So you just always got to take the high ground as well. You know what I mean? So that's where it's at. Yeah. But I think it plays a critical role as well, Blake. But as I said as well, I'm not here. I just want the market to make that decision for me, not myself.
Sure. And like, say you put this trade on, Jimmy, and you got a big spike in the price.
Yeah.
Like, how would you look at managing this trade? Because obviously you'd have half of the trade that's nearly worthless.
Well, the thing is, the key is sometimes, and this is what it comes down to. Do you close the winning side first and hold on to the other side? That might be a reflection. So if you get the move back down, let's say it falls, right? The put side will be close to max, okay? So you close that side out, take your profit, and then just leave the calls. That's it. And if it happens the other way, and then just leave the puts. If the puts are worth nothing to close, you might as well leave them open. You understand? And away we go. Because they're April expiry, you might get lucky and it might come back as well. I've had trades where sometimes it's gone in my favour, so I've closed out the winning trade, and then obviously left the other side and it's come back the next day. You understand? And then other times, something like Wesfarmers just keeps going. So the puts are just going to close out and just expire worthless as well at this stage. Yeah.
Michael, I'll give you a call afterwards and just talk about fee structure and just relating that to the premium that you're spending on the trade and how that can work, or how you consider that as you are trading. So I'll speak to you after in relation to that. But that's a good insight, Jimmy. Would there be any times where you play that maybe you don't see a movement in the underlying stock after earnings, and what would you look at?
Yeah, so what I find, obviously, and as I said earlier on as well, this time around you had pretty much your property space move, your your commercial. That sort of not your consumer sort of discretionary sort of stuff. I find personally myself, I never play the banks in reporting. Very rarely do they move as well. So they usually move by 2-3% on a daily sort of move as well. Even your big stocks, so your BHP, unless something comes out of the closet, usually they don't move as much, guys. So that's what you sort of find as well. So they're the ones that I sort of don't play. You've got to always look at ones that you sort of, and a trick is, guys, or another trick as well that you sort of want to sort of look at as well is go look at the history of the stock. See what it's done in the last 3 years. Doesn't move in report. You can sort of track what it's done. You know what I mean? Look at your charts, and if it doesn't move, is there any point playing it? That's where it's at.
Yeah. Do you see Angela's questions, Jimmy? Just around maybe trading a like a straddle position?
Yeah, you can do that as well. Look, you've asked. Yeah, that's an easiest way, Angela, as well. So no problem there as well. So, but what you'll find sometimes, I don't mind doing that strategy as well. You just got to be careful with volatility. That's all. You understand? So the trick is if you can get low vols, great strategy, no problem. Yeah. But if it's high vols, you just got to, I think sometimes it's okay to sell on a high vol sort of environment, personally.
Sure.
Yeah. Because it's a bit of a hedge, and if it doesn't move, at least you've just sold legs will expire. Do you understand? So it sort of cushions a bit of the sell off as well. And as you can see with the payoff diagram as well, if it sort of goes sideways, you're not going to get hurt as much as well. So that's where it's at.
Yeah. You probably and you're right. You need to have a look at the volatility chart, because as we saw on Coles, it had spiked up quite a bit over the last week or so in anticipation of earnings.
Correct. So, and they're expecting something to happen out of it as well. So that's why, if you don't want to sell the calls, that's fine as well. You can do the strategy as you're sort of suggesting, Angelo, but be mindful if it goes sideways, you have got no hedge as well. That's what it's at. And this is why I say to you guys again, and I'll say it again, the payoff diagram in this, is very, very, very important as well. You know what I mean? If you're going to be playing reporting, you got to know automatically before you get into the trade what you're going to receive. If it moves here or it doesn't move there as well. Because if you don't know that as well, there's no point trading it personally as well at this stage.
Yeah. So you can see the payoff diagram for at expiry. If you want to have a look between now and expiry, go to the table and you can kind of get an indication of the price at a certain period in time between now and expiry to see what the value of the strategy might be too. And you can adjust the implied volatility to get an accurate reflection of that.
Yep.
Very good. I don't think there's anything else to cover, Jimmy, unless there was one last stock you wanted to look at.
Nah, that's it as well. So I'm just sort of using, obviously, what's been happening with Coles and that as well. You know what I mean? So obviously Woolworths and that. So that might be the play. Apart from that, we'll sort of end the reporting. Let's see what happens with this market as well at this stage. So we'll go from there.
Yeah, great. Well, thanks for your time, Jimmy. Very insightful. It's always good to get an understanding of around the professionals, the guys that do this day in and day out, what they look for and how they look at trading things. So we'll have you on again in the very near future. And thanks everyone for joining in today. This session is recorded, so we'll put it up on our website later today as well if you wanted to rewatch or share with a friend. And we'll all speak again soon. Thanks, guys. Have a good one.
Take care, guys. Happy trading. Take care. See ya.